Good evening and welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, your money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're furnished with relevant and comprehensive market analysis. Tonight, we focus on Caledonia Mining, a leading gold producer in Zimbabwe with a listing on the alternative investments market in London. Now, let's take a moment to get into the highlights of the firm in light of the recent development, the history, as well as other exciting developments where the firm is concerned. Now, Caledonia Mining Corporation is primarily involved in the production of gold, the exploration as well as development of other precious metals. The group has operations in Zimbabwe, South Africa, as well as Zambia. The company's activities are mainly focused on the Blanket mine, which is located here in Zimbabwe, particularly 560 kilometers south of Zimbabwe's capital, Harare. In Zambia, the firm runs the Nama Copper project as well as a cobalt project there. The group has 80 claims in the Gwanda Greenstone Belt, covering over 2,500 hectares of land. Now let's take a moment to get into the operations of Blanket Mine. Well, this is one of Zimbabwe's leading as well as largest gold producers, having produced over 51,000 ounces of gold per annum over the past 5 years. Well, believe it or not, on this very mine, everything that glitters definitely is gold. Furthermore, the Blanket Mine is a village that is located 140 kilometers south of Bulawayo, and operations date back to 1904, wherein the operations there were very much on an artisanal basis until they were industrialized by the Matebele Reefs as well as the Estate Company. In 1911, the mine was sold to the Rhodesia Syndicate before operations ceased in 1916. Well, they would come on board a different owner, particularly in 1941, that would be known as the FDA Payne. In 1964, a Canadian mining company known as the Falcon Bridge would assume operations, mining over 500,000 ounces of gold over a period of nearly 30 years. In 1993, the mine was sold to the King Cross Gold, which produced over 400,000 ounces of gold within a space of just 12 years. 2006, Caledonia Mining, a firm that had been established in 1993, would assume the operations of the mine, controlling a minority stake within that very mine. Between 2019 and 2020, Caledonia Mining has since increased its shareholding from a 49% stake right up to 64%. Now, on to some vital stats where the firm is concerned. As I mentioned earlier, the firm is listed on the AIM in London and has a £165 million market cap vis-a-vis a share price of 1,363 shillings. Caledonia recently delisted from the Toronto Stock Exchange and has since expressed interest to list on the Victoria Falls Exchange, according to the Business Times. Now, gold is one of Zimbabwe's largest foreign currency earners, having generated more than 25% of Zimbabwe's forex receipts over the past 5 years. Notably, in the year 2018, Zimbabwe produced 33.2 tons of gold for that very year, slumping to 27.8 tons in the year 2019. This, of course, saw Zimbabwe ranking 8th on the continent of Africa. Now, on the cards tonight is a focus on a recent memorandum of understanding that was signed between Caledonia Mining and, of course, the government of Zimbabwe for the ramping up of gold production across the Caledonia Mining Group. Now, if you want to get into the details of that very development, you would have no option but to stay tuned. Don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure, and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Now, Caledonia Mining signed a memorandum of understanding with the government of Zimbabwe to ramp up its production from the current, which is less than 2 tons per annum, to over 18 tons by the year 2030. Now, to discuss these and other developments with regards to the miner, I'm joined on set by our very own Chief Analyst for Equity Access, Respect Kwenzi. Respect, good evening and thank you for joining us on the Earnings Review.
Thank you, Eben. It's always my pleasure here. Good evening, viewers.
Fantastic. Now, to get us started, Respect, can you give us details with regards to Caledonia Mining as well as its presence and operations, particularly in their Zimbabwean market?
Yeah, so Caledonia runs Blanket Mine, which is the largest single gold mine in Zimbabwe by production. Of course, there are other players which are coming on board and trying to ramp up their production. And over the next few years, obviously, that dynamic might tilt. But I think one critical element there is that the way this mine is structured is such that there are 8 offshoots within the mine. It has been doing some mining production there since 1905. And over the progression of years, they have increased production and also increased the capacity of their plants. So they're actually really looking set to keep on dominating that sector in terms of production, and they really do have got faith in this country. So that's as much as a bit of a background is concerned.
Thank you for that, Respect. Now, just briefly, I want us to have a look at some of the visuals there from the MOU signing between the government of Zimbabwe and Caledonia Mining, where Steve Curtis gives us details with regards to what has taken place over the most recent quarter, as well as how important this MOU is concerned in as far as the progression of the operations of Caledonia are concerned. Let's have a look.
I'm confident that Caledonia has the right skills and the in-country experience to explore them and bring benefit to both parties. Caledonia has had much success in Zimbabwe, and this morning I'm proud to announce that we released a third quarter production update, which announced that we had produced over 15,000 ounces in the last quarter, which is nearly 500 kilograms of gold. The production for this year to date is now 12% over that of last year, and as a result, we've been able to increase our annual production guidance for 2020 from 53 to 56,000 ounces up to 55 to 58,000 ounces. This is obviously a tremendous result, and I would like to thank the team for their continued hard work, and the delivery of a result like this in an environment that has been hit by the pandemic is testament to the resilience of Zimbabweans and to the capacity that the Blanket Mine management team has brought to this exercise. And for that, I say thank you very much. Operations during the initial 3-week lockdown in early April ran at 93% of planned production, and production for the whole of the second quarter was only 1.2% below plan. I'm pleased that Caledonia, during this period, has been able to make donations to the Chamber of Mines and communities of just over $1 million US. This was to assist with the education and the fight against the COVID pandemic. Our first priority remains, and always will remain, the safety and the health of all of our employees and their families. Management has taken active measures to help minimize the risk of infection and to safeguard the continuity of day-to-day business operations at Blanket. However, slower progress on equipping the central shaft and restrictions on cross-border movement of specialized personnel has resulted in a 3-month delay of our project. The shaft equipping will now be finished by the end of fourth quarter of this year, and the commissioning will be completed during Q1 of next year, 2021. We would like to take this opportunity to thank the Zimbabwean authorities for the assistance we have had over the past 9 months in getting specialized personnel to the mine to continue with the shaft project and to ensure that health and safety has remained top priority for the operation. We also recently approved the construction of a 12 megawatt solar plant at the Blanket mine at a cost of approximately $12 million. We expect to have this operational this time next year. Once constructed, it will provide approximately 30% of Blanket's total daily electricity demand and reduce our greenhouse gas emissions and Blanket's dependence on the grid power. This is a very exciting project for us. In 2015, we first announced that we were starting the construction of the new central shaft at the Blanket mine. This was nearly a $70 million project, which has been fully funded through internal cash flow and is one of the largest gold mining investment projects in Zimbabwe, and we believe will be transformational to our business. Having completed the sinking to 1,200 meters last July and the equipping by the end of this year, we are on track to hit an annual target of 80,000 ounces, which is nearly 2.5 tons of gold by 2022. We are pleased that over the last 5 years, enormous levels of skills transfer have taken place at Blanket because of this project. As a company, however, we see the importance of investing in future growth, and the increased production, together with the higher gold price, means that we have the financial capacity to consider further substantial investments in the Zimbabwe gold sector.
There you have it, Curtis there, the Group Chief Executive, shedding light in terms of the prospects for the group and how they intend to increase their production. But to get started, Respect, he first of all talks about how they reached record production for the Blanket, for their operations, where they produced 15,000 ounces of gold during this very COVID-induced turbulence period. Your take where that development is concerned?
Obviously, this is an outperformance given the background of COVID. If you study across the world, many mining operations had to scale down production during the COVID period is they were trying to observe some of the regulations that were recommended by the World Health Organization. But for Caledonia, they came on board around May thereabout, and they communicated that government had given them a waiver to continue in terms of production. But of course, on the selling part, it was another story, because the normal channel there of exporting to Europe is via South Africa. And so there were challenges in terms of the logistics aspect. But in terms of production, they maintained production levels, and they were only down over a very few weeks. So I think that achieving such a production level, which is really the highest ever that they have done on a quarterly basis, I think it's really commendable. It also shows that they do have prospects of improving in terms of the targeted levels going forward. But I think it also moves us to the aspect of future targets. So by producing about 5,000 ounces in a quarter, it gives you a production level of about 0.5 tons within that quarter. So they beat prior periods in terms of the actual, but in terms of the forecast, that would give you a year-end figure of about 2 tons thereabout per annum. And I'm sure that from this procession that which we have just watched here, it speaks to increasing production levels to some number which is really high up there by 2030, and that's really ambitious on the outset. But we could do a bit of maths around it to really see the prospects. I think that achieving...
Let me jump in there. They intend to increase their production from the current 2 tons to 18 tons. Zimbabwe in 2018 produced 33.2 tons, and in 2019 slumping that to about 28 tons. So this means they intend to increase their production to more than half the national output for Zimbabwe? I'm just saying this so that we put this into perspective. Can you speak to us in terms of the feasibility of such a development to their operations?
Yes, so when you're looking at future production levels, it's always a function of the kind of ore reserves, or the magnitude or the size of your ore reserve, as well as the investment that's required to scale up that production level. So they do have got the ore reserve. Like I said earlier, they have been doing mining production within the blanket belt for almost for over 100 years now. They started mining within that belt around 1905 in their different offshoots, and these offshoots are regarded as different mines within the blanket mine. So I think that in terms of the ore reserve, there is definitely enough resources to beat or to meet that target. But I think that much of the challenges that mining companies face here are matters of geography and matters of policy, and these have constrained the kind of investments that Zimbabwe has been able to attract. Just last week, one of South Africa's leading miner with investments in Zim, they run Zimplus, which is Implus. They said that we could not invest, or we cannot clearly project the economic direction of Zimbabwe on the very short term, and therefore we had to withhold some of our investment into that market. So that really speaks to some of the challenges that external parties or those institutions that might want to invest in some of their local operations might see as deterrences. So I think for Caledonia, yes, they're listed on a global bourse and they're able to possibly attract funding, but it's always a function of whether that capital is acceptable, and acceptability is a function of policy. It's also a function of economic stability, and Zimbabwe has failed on these fronts over the past few years. So yes, they want to invest about 12 million into this venture so that they scale up their production capacity and processes, so that they will be able to speed up production to the levels that are targeted. So it's really a function of different things, but primarily it's a function of having the ore reserve and having the necessary infrastructure, and obviously that has to be supported by policies. So the policy front is amiss, but they do have got the ore capacity, and they also do have got possible financing, but that financing is dependent on what happens on the political or on the policies aspect of the economy.
A key development in 2015, as the group went on to embark on a project that saw them invest scores of millions into their operations, particularly where the deepening of their central shaft is concerned, and the commissioning of that very project is set to take place within the first quarter of 2021. How important is that very development in terms of cementing their position where ramping up of production is concerned?
Yes, I think that is quite significant and notable, especially against the 2030 target of 18 ton. I think once they commission this new equipment that they've put in place on the central shaft, it will immediately increase their potential capacity to about 8,000 to about 8,000 ounces per quarter by 2023. So I think that's a movement. It's a progressive movement towards achieving the possible 18 ton as a 2030. But I think you also highlighted in terms of the country what we have been able to achieve. 2018 we reached about 33 tons, which was the highest. In 2019 we scaled back a bit to about 28, 27 point something. In 2019 the projection is that we might not even be able to beat last year's target. I think the highest that we can do this year is between 25 and 26 tons. So, but then when you look at the reasons why we are failing to beat that target, it's not because we don't have the ore. I think we have got one of the largest ore deposits in the whole world. We feature in the top 15. So I think our challenges have been more structural, economic structural challenges that we've faced. And capital, I mean, from the foreign side has been obviously deterred because of some of the policy measures that we've put. In the first instance, it was indigenization, and now we're seeing the new government introduce a whole new set of policies that obviously have taken investors back. I mean, in terms of trying to see whether they should come in.
I will need us to get back to the issue regarding policy. But talking about the macroeconomic environment, there are several challenges that continue to come in the way of output here in Zimbabwe. There are issues to do with issues to do with power. There are issues to do with increasing costs of doing business, even in US dollar terms. Can you speak to us where that is concerned, and also how a solar plant where the firm has invested millions of dollars to ensure that they've got adequate power, can you give us details and how that ties together where their operations are concerned?
Yeah, so this is also significant, the fact that they have invested in solar energy, and the levels of production are able to capacitate the whole production line. But I think more specifically, this is something that relates to trying to move away from the challenges that are pinned to the economics of the country. Why? Because if you subject your production to ZESA, it simply means when ZESA is out, you also get to lose in terms of your production. So by moving away from this risk, you are reducing your exposure to Zimbabwe. So when you're generating your own power, you're able to push your processes irrespective of what happens on the national grid. So I think this is a progressive move towards de-risking the mining operation from some of the structural challenges that we have. So yes, it's going to improve production efficiency. It's also going to improve the production rate, and it increases the certainty around the aspects of production. So I think it's a very positive move, and it also shows that the company is committed to investing in Zimbabwe.
We will take a break, Respect. When we come back, I want us to have a look at some of the details made reference to by His Excellency the President of Zimbabwe, Mr. E.D. Mnangagwa, with regards to the direction that Zimbabwe is taking from a mining perspective, as well as some of developments taking place within the gold sector. Don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Thank you for joining us once again. We are still discussing issues to do with Caledonia Mining and how their operations are concerned. And still with me is Respect Kwenzi, the Chief Analyst for Equity Access. Now, Respect, we are in a season where we are seeing the strengthening of gold prices, and we would want to look at how this would impact on Caledonia Mining. But before we do that, let's have a look at a clip from the President of Zimbabwe, His Excellency, shedding light where the direction of Zimbabwe in as far as the mining sector is concerned, and also how Caledonia fits into that very jigsaw puzzle. Let's have a look.
This ceremony is a milestone achievement towards our quest to attain a US 12 billion mining sector economy by 2023. Furthermore, it is indicative of the Caledonia Mining Corporation's explicit interest to invest in our economy, affirming that Zimbabwe is a safe investment destination. Ladies and gentlemen, this MOU between my government and the Caledonia Mining Corporation is vital as it defines the responsibilities of each party. It further provides scope of authority, clarifies terms, conditions, and outlines compliance issues with regards to proposed mining interventions. I therefore exhort the Ministry of Mines and Mining Development and the Caledonia Mining Corporation to speed up the implementation of this agreement. Bureaucratic and lethargic tendencies are a thing of the past.
That, of course, was the president talking about how Zimbabwe could produce $12 billion in revenue in US dollar terms by 2023, with gold contributing $4 billion to that. How does that fit? Where does Caledonia fit into this very matrix, and how does this affect the progression of the firm?
Yeah, so as the biggest player in gold at the present moment, obviously they come in handy. If you look at the net earnings from minerals in Zim, gold accounts for almost 30%. So they're quite strategic to the national vision. I think that's why they have to be at this level of conduct with government. So obviously the 2030 vision is also coming from that background, where you are also looking at mining houses' capacities to improve their own potential. So I think for Caledonia, it really is in line with what they themselves have also planned to undertake. But I think the national vision of trying to achieve a $12 billion industry from mining is also a bit more on the ambitious side. We have seen already an economic decline for the year 2019 and also now for the year 2020. Our GDP as a country in 2018 was last recorded at about 23 billion, and that is the overall production value at market of all the goods and services in this country.
Right.
And mining's contribution to that figure was just about 10%. So when you look at the mess there, it shows you that we were way off the mark. But in terms of our export receipts, I think we've been generating about 1.3 billion from net exports of minerals per annum. And achieving a $12 billion target, it means we have to grow more than tenfold. And that's really ambitious. It's a function of robust incentives, taxation around mining companies, general legislation around companies, creating of special economic zones, also an enabling environment characterized by a stable currency, consistent and clear definitive economic policy measures. And I think that by 2020, most of these are still quite outstanding. And to even assume that we can move even from 2 billion, I think it's really something that you cannot certainly vouch for or see in terms of just anticipation.
What I also find interesting is the fact that a $4 billion target has been set for gold. And yet, if you look at what's playing out in our economy, the environment seems to be perhaps on the hostile side in terms of the submission of gold to the national channels, which would be the fidelity printers. And then if you look at the stats at the same time, you'd find there is a very strong correlation in inverse one between the submission of gold to fidelity printers vis-a-vis currency stability as well as inflation. Even dating back to as way back as 2008, 2009, you'd find we hit a very our lowest in 2008, where we had market vagaries and volatility. And it seems we're seeing what seems to be a deja vu in 2020. And what would be your outlook, particularly where the gold sector is concerned, given this very premise?
Yeah, so if you look at the structure of gold mining in Zimbabwe, I think small-scale miners account for over 60% of the total produce on the market, or total deliveries that are extended to fidelity printers. So the implication is that whenever there is currency challenges, such as the one that we're experiencing, and as you have rightfully noted in 2008 as well, they tend to be a sharp decline as small-scale miners redirect their produce elsewhere. They want to get full value of their produce, so they take their produce to South Africa, Mozambique, etc., via some informal channels, and channels that are not legally regulated. So the implication is that the national pes, or on the accounting side, you can no longer account for certain mineral production. So the real issue there is about miners trying to get full value of their produce. So if you sell your gold to Fidelity at a certain point, before last month, you would get to realize possibly 75% of what you would get if you're selling the same produce in Mozambique. Why? Because that retention portion, or the share that you were supposed to, or government was supposed to get, it will have to be paid for in local currency at the market rate, which is very low compared to the parallel rate. So that discrepancy led to a sharp decline in terms of net earnings from the small-scale miners. For the large-scale miners, it has just been about trying to scale back production and preserve your resources.
Right. As we wrap up, two developments that I want you to shed light on. First, it's the delisting of this very firm from the Toronto Stock Exchange, as well as the expression of interest to list on the new Victoria Falls Exchange against the backdrop of strengthening gold prices.
Yeah, I think looking at the Toronto listing, it was simply a matter of trying to consolidate. You are listed on the London AIM, and you also have got a listing on a bourse of similar nature, and obviously you would just want to consolidate in one market. I think there's no more advantage in trying to constantly increase that base. And looking at the VFX, I think this is obviously trying to shape your operation in line with the national vision, as well as also trying to bring that investment closer to Zimbabwe, so that Zimbabweans can also participate. I think these were the motives around this move.
Thank you, Respect, for the insights. Thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African Time on this very platform. From the Equity Access team and I, Danke, and ciao.